Hello, good day. This is Kingsley Abedi. Okay, today we'll be talking about three methods of investment diversification. Firstly, what is investment diversification? Investment diversification simply means putting your investment eggs in more than one basket. So let me give you an example. We have a farmer who deals on poultry, right? So what happens if flu ravages the whole of the poultry farm? The farmer has lost all, in that situation. So if that same farmer has invested in maybe poultry, you have piggery, then also some grains, right? It is only a fraction of that farmer's investment that would have been affected. So that is exactly the concept of investment diversification. So we are going to be talking about three areas in which you can diversify investment, and the first one is sectoral diversification. What is sectoral diversification? So I'll just give you a very good example of we have banking, oil and gas, and insurance. So it simply means that investing in stocks that are not in the same sector. So we have here banking sector stocks. Let's say, for instance, First Bank, GTCO, Access, UBA, Zenith. These are the Fugas banks, right? Then we have oil and gas, maybe Seplat, Total, and all that. Then insurance, we have AXA Mansard, WAPIC, and all that. So if somebody invests in these three sectors, okay, when a particular sector, let's say the oil and gas sector, is having a decline, the banking sector may remain vibrant, and also the insurance sector may remain vibrant, in this case. So sectoral diversification means investment in assets in different sectors. So the next one we'll be talking about is uh, asset class diversification. So what is asset class diversification? So assets, they have different classes. We have shares, bonds, treasury bills, mutual funds, ETF. We also have cryptocurrency. Now the good thing is cryptocurrency is legal to be traded, in Nigeria. It is no longer outlawed. Okay, so what are shares? Of course, shares are just unit of ownership of a particular company, while bonds, they are being issued by the federal government. The same thing with treasury bills. Treasury bills are also issued by the federal government, but mutual funds, are particular funds that are being set aside. So, and of course, in mutual funds, it could be a combination of several sectors. There are some mutual funds that are solely based on stocks. There are some mutual funds that combine investment in stocks, bonds, and treasury bills. So we have different categories of mutual funds. So that's for the asset class category. Now, the third category here is global diversification. Many people who are not very confident in their domestic currency, they tend to diversify by investing in another country's currency. So let's say, for instance, you are in Nigeria here. There are several ways through which you can buy stocks of other companies in other countries. So you can of course do your own search. I don't want to make any recommendation, but you should be able to buy let's say Apple stocks, other stocks, US stocks, right? So these are just the major ways in which you can diversify. However, from the look of things, the Nigeria economy is becoming stable under this current administration. So people, I believe people are being encouraged, to invest in our local economy, our local stocks, and our local assets. So this is not to say that you should not diversify your investment globally. However, it's just a wake up call for us in Nigeria. Thank you so much for watching. And of course, if you've not subscribed, please make sure you subscribe to this video. Thank